Age is just a number. But this number gain in terms of our personal finance should not go for a toss when the age increases, isn't it? Regardless of age, one always has to make sure that their money works for them. But with age being a major constraint for senior citizens, choosing the best investment plan in India is necessary. Well, in India, senior citizens have various options to choose from, but what suits one investor might not suit the other one. Therefore, in this video, I am going to tell you the 5 best investment plans for senior citizens in India, and at the end of this video, I am also going to compare the best schemes so that you can make an informed decision on which investment plan is most suitable for senior citizens. Hello and welcome to Indian Money's YouTube channel. I'm your host Sugandh Sharma, and before we get started, if you have not subscribed to our channel, please do so because we bring you a lot of informative videos related to personal finance. First, let's understand who is a senior citizen in India. According to Indian law, a person who is a citizen of India, a resident of India, and has attained 60 years of age is termed as a senior citizen. And a person who is above 80 years of age is termed as a super senior citizen. So basically, people from 60 to 80 years of age are called as senior citizens. So without a further ado, let me tell you the first plan in the list of the best investment plans for senior citizens of India. Well, this plan is called the Senior Citizen Savings Scheme, also known as SCSS. Senior Citizen Savings Schemes or SCSS is one of the post office savings schemes provided by Government of India. Well, this scheme offers safety and regular income to the senior citizens. The interest is computed every quarter and credited to the account of the investor. Well, in the current scenario, the Senior Citizen Savings Scheme interest rate is about 7.6% per annum. Yes, you heard it right. It is one of the best interest rates that you can get in a government scheme. It is also one of the highest rates offered in a fixed income small savings schemes out of all the schemes of the government. But 7.6% per annum is the interest rate that is fixed for the third quarter of financial year 2022-23, that is from October to December. Well, let me tell you that this interest rate is subject to change every quarter by the government. Now you must be wondering, what is the minimum investment amount required for this scheme? So let me tell you, the minimum amount required is just rupees 1000, and the maximum amount that you can invest in this scheme can go up to rupees 15 lakhs. Also, one very important thing, Senior Citizen Savings Scheme has a lock-in period of 5 years. So for example, if you take this scheme when you are 60 years of age, by the time you are 65 years of age, you are going to get your principal amount as well as the interest, and you are going to have a lot of money for your needs like travel, your daily expenses and more. Now let's skip to the good part. The investment under SCSS also qualifies for tax deduction under the Income Tax Act of 1961 under the section 80C. However, the interest income is taxable and TDS is also deducted if the interest that you earn from this scheme is more than rupees 50,000. The investors can claim a tax benefit of up to rupees 1,50,000 under this scheme. Well, investors can also prematurely withdraw their SCSS investments, but that is subject to certain deductions, which means you would have to pay certain penalties if you plan to withdraw your money before the completion of 5 years. So first up, the premature withdrawal is only allowed after 1 year of the completion of the SCSS. For withdrawals within 2 years of account opening, they attract a penalty of 1.5% on the invested amount. Also, if you wish to withdraw your money after 2 years are completed, then 1% of penalty will be charged on the deposited amount, and in case of account holder's death, the account is closed and the money is transferred to the nominee. So if you are planning to invest in senior citizen savings schemes, do not forget to declare a nominee for your account. Well, now that we have talked about the most popular savings scheme, the senior citizen savings schemes, let's head to the number 2. Well, on the second number is PMVVY, the Pradhan Mantri Vaya Vandana Yojana. Even our Prime Minister Narendra Modi advocates this scheme a lot. This is one scheme that offers both retirement and pension benefits. Life Insurance Corporation of India, LIC, with the purview of government, manages this scheme for senior citizens. Well, PMVVY scheme offers a fixed return, and the duration of this scheme, the lock-in period for this scheme, is 10 years. So basically, PMVVY guarantees a pension payout at a specified interest rate for the duration of 10 years. Well, this scheme is going to provide an assured interest of 7.4%, and the payouts in terms of pensions can be monthly, quarterly and yearly. And as I told you earlier, this scheme requires the subscribers to be of 60 years or above 60 years of age. Now let's talk about the minimum amount that needs to be deposited. Well, the minimum amount that one can deposit is 1,50,000, and the maximum amount that one can deposit in PMVVY scheme is 15 lakhs. A beautiful thing about this scheme is that one can avail a loan against the deposit that you have made in PMVVY scheme. But there's a catch. A loan of up to 75% of the purchase price can be availed, but only after the completion of the duration of 3 years. Now that I have told you about the senior citizen savings schemes and Pradhan Mantri Vaya Vandana Yojana, let's head to the third investment scheme. Well, post office income schemes are always popular in our country, isn't it? So on third number is Post Office Monthly Income Scheme, which is also called as POMIS scheme. And as the name suggests, India Post or Department of Post in India offers the post office monthly income scheme to the senior citizens of our country. This is also a scheme which is backed up by the government of India. It is a very low risk savings scheme, and it offers a guaranteed interest to all its subscribers in form of monthly payouts. Well, the interest rates are revised every quarter, and currently the interest rate is 6.60%. And the lock-in period of the scheme is 5 years. After maturity, either investor can withdraw their money or reinvest the money back into the scheme. The minimum deposit amount is very low in this scheme, which can be as low as rupees 1,500, and the maximum amount that you can deposit is 4,50,000 rupees. However, in case of a joint account, the maximum limit is around 9 lakhs, just in case you're opening a joint account with your life partner or someone else. Here also the good part is that POMIS scheme account can be transferred from one post office to another, just in case you change your city or your state. And similar to the other schemes, this scheme also offers premature withdrawal after the completion of 1 year of the scheme. But as I told you earlier, anytime if you ever do a premature withdrawal in any of your savings schemes, it attracts a penalty. Well, in this scheme also, the regular monthly interest payments are made to the account of the subscribers. Well, let me tell you, not only senior citizens, anyone who is above 10 years of age and is a resident of India can invest in this scheme. Now let's head to the fourth scheme. Well, senior citizen FDs are one of the most popular schemes when it comes to the traditional investors. For people like my parents, they always have believed in FDs rather than other schemes. Bank fixed deposit investments are the most preferred one because they offer fixed returns. It is very easy to open them, and people are really a fan of senior citizens FD as they offer higher rate of interest as compared to the normal FDs. Again, these are also the low risk investment options which guarantees your return. They have fixed returns. In any bank, normally an FD rate, whenever you book a fixed deposit for yourself, the interest rate varies from 3 to 7% depending upon your bank. But in case of senior citizens, when a senior citizen books a fixed deposit, additional 0.5% or more than that interest rate is offered to senior citizens. But before you enroll for a senior citizen fixed deposit scheme, you always make sure that you inquire what interest rate are you getting from your respective bank, as it changes from bank to bank. Also online, a lot of calculators are available if you want to calculate how much money you will invest, how much interest you will get after certain period of years after investing in fixed deposits for senior citizens. Well, these days, if you head to your bank's website, you do internet banking, there is always an FD calculator available there as well. They can choose between getting their interest paid to them regularly or all of it at the time of the maturity. For regular interest payments, they also have an option to choose from whether they want to get their interest rate paid to them monthly, quarterly, half yearly or yearly. Well, if senior citizens are investing in a tax-saving FD, which is usually an FD which is more than 5 years, they can claim tax benefits up to Rs 1,50,000 under the Section 80C of Income Tax of 1961. Also, if the interest payable to the senior citizen exceeds Rs 50,000, then a TDS of 10% is cut on the interest. Again, investors can calculate their tax liability using a tax calculator which is easily available online. I would also like to tell you that these FDs, the senior citizen FDs that you make, you can also get a loan against these FDs. I agree that the interest rate of senior citizen FD is lower than the other schemes that I told you, but investors feel that the bank FDs are the most secure way of saving and investing their money. Now let's talk about the fifth best investment plan for senior citizens. Last but not the least, it's the tax-free bonds. Tax-free bonds are issued by government infrastructure organizations like NTPC Limited, Housing and Development Corporation, NHAI, and Indian Railways Finance Corporation, and lot more. Well, the tenure of this bond is above 10 years. Moreover, the investment has a lock-in period until maturity. Well, the interest rate of these bonds varies between 5.5% to 6.5%. The bond issuer pays interest annually and the entire interest that you earn is tax-free. But do not worry, these tax-free bonds are a low-risk investment as they are backed up by the government of India. Well, the chances of default are very low. Well, this scheme also offers capital protection and regular income in form of interest payouts. Well, I believe that this is an ideal scheme for senior citizens. Though there is a lock-in period, but investors can sell these bonds in the stock exchange. The return from the bonds will depend on the purchase price, as the volume in which these are purchased is very low and hence they trade in low volume. The gains from the sale of the bonds is taxable under the Section 112 of Income Tax. If the bond is sold before completing the 1 year, then the income from the bond is taxable under the income tax slab in which the purchaser comes. Now, suppose the bond is sold after 1 year. The long-term capital gains will be taxable at 10% with indexation and at 20% without indexation. So, overall, tax-free bonds are a good investment tool for senior citizens. Well, I told you about the top 5 best investment schemes for senior citizens. Now, let's do a quick comparison of all these schemes in a form of a tabular representation. Well, this table will help you make a decision on which is the best investment plan for you. The first column is of investment option, the second column is of returns, and the third column is of investment amount. In senior citizen savings schemes, the returns are 7.6% per annum and the minimum investment amount is Rs 1,000. In Pradhan Mantri Vay Vandana Yojana, the returns are 7.4% and the minimum investment amount required is 1,50,000. In Post Office Monthly Income Scheme, the returns are 6.60% per annum and the investment amount that is required minimum is Rs 1,500. For senior citizens FD, the returns are 3% to 7%. It can also go up to 8% depending upon the bank or the financial institution you are taking it from, and the investment amount also varies according to different banks or as per your capability. And when we talk about the tax-free bonds, the returns can be 5.5% to 6.5% per annum and there is no minimum investment amount amount which is for these tax-free bonds. So now you know which are the top 5 best investment schemes for senior citizens, and now you can also make your informed decision of which scheme you want to invest in. If you want to learn in detail about these schemes and other personal finance topics, then download the Freedom app. On Freedom app, we have detailed courses on many government schemes explaining the pros and cons of each scheme, the details, the maturity, and everything that you need to know. The link is in the description. As senior citizens, when we near our retirement age, we have fulfilled almost all our responsibilities, but still we need money because there will be no income which will be credited to our account in terms of salary or in terms of the business income if we have retired and we are not working anymore. Hence, everyone requires an additional source of regular income post-retirement in form of investments that you do, in form of the interest payouts that you receive. Moreover, you also need to think about capital appreciation. And as we always say, that the money saved is money earned. I have made this video by keeping one thing in mind, that at the age of 60 years, when you become a senior citizen, most of us are not willing to take high risk to earn those extra rupees. We want to invest in low risk options, and we want to invest in options that are going to offer us guaranteed returns. I hope this video has helped you. Share it with your friends and family. Also, do not forget to subscribe to our channel and download the Freedom app. If you have liked my work, hit the like button. Until we meet next time, this is your host Sugandh Sharma signing off.